In this video, I'm going to talk about the top 3 LEAPS call options to buy in 2025 to potentially 5x your money. And I'm also going to show you that I'm also in these current positions in my portfolio. So let's go ahead and jump into it. As you can see, the current portfolio is at 715K. I plan on turning this into $10 million in the next 7 to 10 years. So if you haven't subscribed to the channel, if you want to watch me do that, click down below so you can follow along with me. Once this market recovers, I do see this being close to 950K, potentially even breaking that $1 million mark with the help of these LEAPS options that I'm about to show you. So let's first dive into what LEAPS call options are and how I particularly trade them, because I trade them a lot differently than other people. A lot of people who are buying LEAPS at the top of the market are now seeing their LEAPS call options in major red, and that's not good, and I don't want you to be in that position. So I want to show you how I do it to kind of minimize that risk of having your LEAPS call options be down 80%, okay? So LEAPS call options, these are long-term equity anticipation securities. So it's like buying a call option that's 365 days out in expiration or more, and I'll talk about exactly why I do that. So these are the only type of options that I personally buy in my portfolio. I'm an option seller. 90% of my portfolio consists of cash secured puts and covered calls, and then 10% consists of sprinkling in these LEAPS options to, double my money, triple my money, gain 40% in a week or two. So that's where I like to kind of, add these in to really boost my returns on an annualized basis. So the reason why I go out so far in time is because of the low theta decay or low time decay. These options decay about 3 times less than a short dated call option, going out 30 to 60 days, and I'll show you why that is, okay? I like to buy these options at 70 to 80 delta, okay? That's the sweet spot. So for every dollar that the stock goes up, I'm making 70 cents to 80 cents, and I'll show you exactly how that is on the options chain. They have unlimited upside potential. So essentially you could hold these for as long as the stock goes up, obviously closing out about 3 months prior to expiration. And you're leveraging your money around 3 to 1. So usually you pay a third of the price you would have paid to own 100 shares. So that's why I like LEAPS call options for a 10% portion of my portfolio, because it gives me a lot of leverage and exposure to make a lot of money in a short amount of time. So let's talk about this. So when do we enter a LEAPS call option? All right, it has to meet these 3 criteria: good chart and good PE ratio. So the 3 companies I'm going to show you meet this criteria: great charts, upward trending for the past year and a half, and great PE ratios, or a lot of cash on hand, okay? If the PE ratios are high, the company better have enough cash to cover their debts 2 to 3 times over. And one of the companies that I'm about to show you meets that. The PE ratio is high, but it meets the cash criteria. Number 2, when the VIX is above 15, that's when you could start allocating your LEAPS in waves, okay? Right now, the VIX is above 30. So essentially, you could go all in with the 10% allocation of your portfolio into these 3 particular stocks with LEAPS, all right? Because the VIX is extremely high, there's a lot of fear in the market. So the chance of the stock market rallying is a lot higher once the fear subsides on any piece of good news, especially with the tariffs situation, okay? Number 3, the stock is near the lower Bollinger Band. That's something that I put on the chart to indicate, okay, how oversold is this stock, and is it a good time to play the contrarian by purchasing a LEAPS call option? So we're gonna dive into it. Also, let's talk about when to exit. So I like to exit these LEAPS call options if I'm 20 to 50% up in profit in 14 days or less, okay? If you're up 50% in less than 2 weeks, take the profit, because there's a good chance that the stock is gonna come back down and you're gonna lose that entire profit that you could have realized. Instead, you got a little greedy because you think it's gonna keep going up, and most of the time it doesn't. So whenever I hit 20 to 50% in profit in less than 2 weeks, I close it out, even though it expires in 2 years or 365 days. It doesn't matter. That's just a rule that I have in my head, and it's worked very well for me, okay? Versus other investors just hold on and they want more gains and they get greedy. And then one bad piece of news comes out that wipes away all the LEAPS call option gains. And then they wish they would have sold when they had that 20 to 50% profit in less than 2 weeks, okay? Also, you wanna set price targets on the stock that will determine when you get out. And then also, if you're building out a long-term position, so you're buying call options that expire in 2 years or more, then that's fine. You can go ahead and exit in year number 2 and just hold these LEAPS call options like synthetic stock. That's totally fine as well. Not something that I typically do, but it's a strategy and I'm fine with it. So let's go ahead and look at the market so we could kind of determine, you know, where we're at in the overall market, because that's going to really affect your individual stocks and affect the 3 stocks that we're looking at. So right now, the QQQ is down quite a bit, okay? If we take a look at how far the NASDAQ 100 is down, right? We're down about almost 20%. So we are close to bear market territory right now, right? Actually, we're down 20%. As of right now, the close just happened. So as of today, we're down about 20%, which is pretty much essentially bear market territory, right? So with that being said, there's a lot of stocks at a discount and there's a lot of stocks that are actually performing a lot better than QQQ. So those are the stocks that we want to try and find that are kind of more resilient and not being as affected by this stock market crash, okay? In the 3 stocks we're looking at really weren't down much today in comparison to QQQ that's, you know, starting to approach the yearly lows again. So QQQ is down, right? Which is a good time to buy on these individual stocks, especially if they're stronger than QQQ. And the VIX is extremely high right now. We're still trading at 33, which is indicating that there is still a major amount of fear in the market. And every time the VIX has spiked like this, fear has subsided and the market rallied, okay? Just like we saw back in August 5th, 2024. And even during the bear market, you know, we didn't see a VIX this high, okay? The VIX didn't get above 60. Now, during COVID, right, the VIX got all the way up to 87 and quickly recovered thereafter. The fear dissipated. So what I'm expecting going into the next 2 to 3 months, yes, this may take more time for the fear to subside and for tariff deals to come on the table. I do expect the fear to subside, okay? Overall, the economy's fine. People are spending money. The economy is open, right? During COVID, that was understandable. Why the fear was so high. I mean, all businesses were shut down. There was no one allowed to go outside of their house. So we're not seeing that right now. Of course, tariffs may impact short-term inflation, but as we heard from the Fed, long-term, they're not really seeing an impact. Like 2, 3, 5 years down the road, not really an impact, more short-term impact. So yes, the tariffs will play an effect on the economy, but I think a deal will be made. And I think fear is already kind of overstated and priced in. So what I see is that the VIX, from here tomorrow, we could spike up a little bit more, maybe one more spike, and then, back down, and then another spike, right? And then back down, and kind of a slow fear, a decrease in fear. Okay, so that's kind of what I'm expecting. So this really could take 2 to 3 months to play out on these particular LEAPS options that we're about to look at. Or we could get a quick, good piece of news and you might exit these in 2 or 3 days, which I've done multiple times on the stocks that I'm about to talk about. So let's go ahead and dive into the stocks. Before we do, if you do want to make 6 figures options trading, click that first link down below to join me, direct mentorship from me and 60 other investors in my group. Okay, and then also if you want my free trade ideas, that will be on my Instagram where I answer all messages down below, as well as my free newsletter, which is also down below in the description. Okay, so check those out. Let's go ahead and jump into the first stock. We're gonna talk about Palantir, all right? Palantir is not the #1 LEAPS option play that I would get into right now, but definitely on the top 3. I currently have some LEAPS options on Palantir going into earnings, okay? The reason I like Palantir is =1, PE ratio is high, yes, but it does meet the cash requirement, okay? This company has a lot of cash on hand. They have about $2 billion, which could cover their debts about 10 times over just last quarter, okay? They did secure multiple deals recently, like last week, they secured a deal with NATO to implement their Maven AI software. They secured another deal with the government and the IRS system to kind of build out a full-fledged IRS AI software to kind of mitigate, cost savings and waste, right? So these are all things that Palantir is doing. They just partnered up with Heineken, Walgreens, Wendy's, Anduril. There's so many major companies they just partnered up with this year that will be reflected in earnings, which I believe is May 5th, okay? So May 5th, you'd basically be playing this stock on these leaps for more of a earnings play, okay? So there's gonna be a little bit of risk there, obviously, on the downside as well, but let's take a look at the chart, okay? The reason why I like Palantir right here, okay? Number one, it's not quite meeting that criteria of near the lower Bollinger Band, which is right here, okay? And what Bollinger Bands are, you could go to indicators on TradingView, type in Bollinger Bands, okay? And that's gonna be right there. And these basically indicate 2 standard deviations away from the average price, meaning the stock is going to stay within these Bollinger Bands about 95% of the time, but there are outlier moves about 5% of the time. And every time we've seen earnings on Palantir, okay, like right here, this stock tends to blow out or at least get to touching this upper Bollinger Band. And that's kind of what I'm expecting now. So a good entry would have been like, today would have been an okay entry, but tomorrow might provide a better entry. That's why I'm uploading this video now. So just watch for Palantir sub 90, okay? If we touch this middle Bollinger Band line at 88.50, that's gonna be an awesome entry point. Anything below that, wonderful entry point, okay? So you may get this week. So keep an eye out on that. I'm not saying right now is the best time, but I am saying keep an eye out on Palantir, especially before May 5th, okay? Last week was not a good time to get in. Some people got in then, right when this thing went up to 98, and now we're back down at 90. So obviously this week is a better entry than last week if you're playing this long term and you do believe this stock is gonna go up back to 120, then it doesn't matter. You can get in today, hold this as synthetic stock, and just wait it out, okay? So I like Palantir right here. If you compare it to QQQ, okay, you could see how QQQ has just been like crashing and it's almost back to, gonna touch these lows of the year, versus Palantir kind of had that crash and then it's just been trading in this range, kind of sideways but strong. This is what we like to see. In fact, it's kind of had an upward trend ever since the lows, or not the lows, but March 11th, okay? So this is a great stock and wonderful company, and I think they're going to have blowout earnings. That's why I'm playing it. So if we look at the accounts, okay, I have the March 20th 80 calls, which I bought when they were about 365 days out. And then I have the June 18th 85 calls that are a little bit underwater, about 8%, but not that bad. So let's go ahead and go to the options chain and I'll show you which ones that I would purchase. So I would go out about 423 days, or if you want to play this like synthetic stock, you believe in this stock long term, you can go out to January of 2027, okay, and just give yourself ample room to be right. And you could go ahead and buy, let's just say the 72 Delta, okay? I like that one. You'd pay $3,500, the 85 strike, and you'd get to control 100 shares, which would cost you today about $9,000, but this is only gonna cost you $3,500, and you have 2 years to be right, okay? Break even on this is you basically just add this plus this, okay? And that's gonna get you to what? Like $120 per share. So in 2 years, Palantir has to be $120 for you to break even, okay? We just saw 124 like a month and a half ago. So you're gonna be fine on this stock if you think it's gonna go to 120 at least in 2 years. So this is, a very safe strike, 2 years out. Now, if you wanted to go a little shorter in time, you'd go 423 days out and grab the ones that I have, okay? And these are decaying about $3.13 per day, as you could see right here on the theta, versus a short-term call option is decaying about $10 a day, okay? So that's the difference. It's decaying 3 times slower because you're paying for more time. So that's why I like these. So that's gonna be the 2 LEAPS call options that I would purchase on Palantir. Now let's dive into the second stock, which has been my favorite. I've been getting in and out of LEAPS options on Hood about 3 times already for 40%, 20 to 40% returns on each one of those. So I really like Hood. PE ratio 26, that's lower than the S&P 500. Their net margins last quarter were 90%, and they have earnings on April 30th, I believe. Yep, April 30th. So just be aware of that. This would be also an earnings play, but obviously long-term, because you're basically buying synthetic stock with these LEAPS call options. So I think this company is going to do very, very well. Lots of growth in the future, getting into the betting markets. Obviously, they're already in crypto, stuff like that. So prediction markets as well. And they're offering like lending services now and high yield savings. So I love Hood. Robinhood looking very strong compared to QQQ, right? Again, this thing is just kind of tanking. If you look at Hood, it kind of had its low over here in March, and it's higher than that now, okay? So we're kind of, holding these levels. Now, what I do like about Hood is that we're below this middle Bollinger Band line. So right now is a good entry for Hood. Like today or tomorrow, great entry, closer to the lower Bollinger Band than we are the upper. And the stock, obviously is very, very strong, only down 3.2% today versus QQQ 2.5%, but this is a high beta stock. So this thing is holding strong here, just kind of trading sideways, waiting for the market to recover. Okay, so earnings could pop this thing back up to, $50. That's kind of my target for exiting my current LEAPS, which I have. Let's go back to the position, okay? We have the Jan 15th, 35 call options. So these are almost 2 years out, okay, 2027, and I'm about almost break even on these, okay? So that's how I'm playing them. I would go out. You could go to the June 18th. If you went to the June 18th, you can grab the 75 Delta 33 strike. That's fine, okay? And pay $1,400, all right? Or you could go out 2 years like me and just hold these for a little bit longer, pay $1,600 for the 74 Delta at the 35 strike. I like that. Just enough time to be right, obviously. And if I do want to hold these for long term, I have 2 years. So that would be a wonderful spot. But for me, I'm looking for kind of a pop to 50 to exit these quick in the next couple weeks once earnings comes out. If earnings comes out and we don't pop up there, I'll just hold these until we get above 50 long term, maybe in this $50 to $65 range, somewhere in there, and just let them go, okay? So that, and then what I do with that money is I actually plow them back into cash secured puts, which is kind of a safer, more guaranteed income play on stocks like these. So that's Robinhood. I think Robinhood can yield you probably a higher return, considering that it's a lot further from all-time highs and better entry as far as the Bollinger Bands go, okay? Now, the last stock I think is the highest potential return. This one is SoFi Technologies. Now, if you go down to their PE ratio, 28, so again, right in line with the S&P 500, and it's a high growth stock in the online banking sector / AI banking. Last quarter, net margins 32%, so fat margins there, and they have enough, they have tons of cash on hand. So I like this company. And if we go to their chart, okay, you could see that this one has been a lot more beat up, and it's well below the lower Bollinger Band. It's been having kind of a consolidation phase here, and they do have earnings, which is going to be on April 29th, which is coming up. So I really like SoFi for, it's a smaller stock as far as the share price, but very good fundamentals. So I like this one for a long-term play. Now, how I would play this one. So I don't have any LEAPS on SoFi because the cash secured puts are paying out like 7 to 10% at the $10 mark, which I already got into today. But if this thing does pull back a little bit more, okay, maybe it comes back down to $10, that's going to be an optimal time to grab some LEAPS options on this stock. So what I would do, okay, and this is the only one that I do plan on getting into some LEAPS if we could get a better entry here. But, I would go out about 423 days, and I would just go ahead and buy that. If it does go down to 10, I'll probably buy the 7 strike, which is an 83 Delta, a lot higher. You'd pay $500. Okay, the reason I would do that is just because I don't want my call option to get out of the money, because then just theoretically on paper, you'll see the P&L go down a lot faster. Mentally, I don't like that. So I just like to be in the money, so I feel safe around that $7 mark. So $505 there. And that one, if this thing runs up and we start recovering in the next 2 to 3 months, this thing could get all the way up to $17. I definitely see this stock reclaiming these past levels that it was trading at for quite a long time. As you can see, it's just kind of trading in this range for quite a long time. So I do see that on the horizon, and that would be the biggest gain on SoFi. So if you enjoyed these 3 LEAPS call option opportunities, make sure to hit that thumbs up button. I love making these videos for you guys. And I'm going to post another video right here on how I collect a full-time income utilizing the wheel strategy. So check that one out, and I'll see you in the next one. Take care.